What happened in September 1992 that caused the Bank of England to withdraw its GBP from the exchange rate mechanism? And this event is called as the Black Wednesday, orchestrated by one of the largest and most profitable, successful fund managers of all time, George Soros. This event took place 32 years ago, and why am I telling you this story now? Because I want to demonstrate to you what is the power of capital. What is the power of a capitalist who has a lot of money under his or her belt? Let's take a look at what happened way back in September 1992. There was an attempt made by European Union countries. Remember, we did not have the euro as a currency then. There was every country in the European Union had its own currency, like Germany had its Deutsche Mark, France had its French franc, etc. There was an attempt made by these countries to come together under a mechanism called as the Exchange Rate Mechanism, ERM, for the European Union countries. This was the first attempt being made by these countries to get to a common currency. At this point of time, England was in favor of being a part of the exchange rate mechanism. What happened then was it's decided that the exchange rate of GBP1 at that point of time was equivalent to DEM, that is Deutsche Mark 2.75, if I'm not mistaken. Okay? Now, at this juncture, in that phase, Germany was a very prosperous and industrialized country, very, very aggressive, and their currency, they felt that their currency was not to be belittled to this extent against the GBP. So there was a little bit of negotiations, discussions, etc., as to what should be the rate between GBP and the DEM, so that we could have a common ERM, because then we'd have the remaining currencies in place. At this juncture, when there was a discussions going on, a fund manager spotted that it would be difficult for UK to continue with this exchange rate mechanism. So he started taking short positions in GBP. That means he was selling GBP. When he was selling GBP, obviously the currency that they were buying against was either USD or any of the other currencies like DEM or French franc. So when they were buying the other currencies got stronger, right? Whereas the GBP was declining. As he continued to do this, the value of the GBP actually started falling down. Many other investors also joined the short selling bandwagon. It was not the effort of only one of them, primarily George Soros and his quantum fund, but many other investors also started seeing sense in his speculation, in his theory that the rate of GBP versus DEM was not right, and therefore he started selling GBP. When he started selling GBP, the currency value of the others in the currency pair, like USD, like French franc, like Deutsche Mark, etc., started increasing. They became stronger. The Bank of England started to panic. They took on multiple measures to protect and defend the GBP. The first measure they took was to start actually satisfying the demand of the short sellers. Okay, so in the process, what happened was they had to meet the requirement of the FX markets, because as the GBP was continuously depreciating in value and USD was continuously increasing in value, Bank of England started flooding the market with USD. This created some bit of temporary solace to the Bank of England and to the investors, but not a permanent solution, simply because the market was now only meeting the demand supply effect. In the process of selling dollars in the FX markets, Bank of England lost the value of its foreign exchange reserves. George Soros took on even more aggressive positions by shorting the GBP. Later on, what happened was the Bank of England increased interest rates to 12%. Remember, today it is not even 3.5%, but way back then 12%. And the very next week they increased it to 15% in order to protect the GBP. But all these measures failed, and the Bank of England was staring at a situation where they either had to change the exchange rate, that is the exchange rate between USD and DEM, or they had to not participate in the ERM, that's the exchange rate mechanism. Of course, they were different countries. Of course, they were extremely different in terms of industrialization, in terms of GDP numbers, in terms of growth numbers. Remember, Germany had just gone through a massive integration between West Germany and East Germany. So they were also having their issues, but they were still extremely competitive and very industrialized. So there was a lot of financial, economic, monetary turbulence in the European zone way back in the 1990s. And that turbulence was an opportunity that George Soros grabbed. In the 5 to 6 months preceding the Black Wednesday event, he had got into a short sell position totaling not 100 million but 1 billion pounds was the short position that he had incurred. On that position, he had made so much of money. Okay, and forget the money part of it. The Bank of England, on seeing the value of the GBP continuously depreciating and finding that despite its efforts of selling dollars in the markets and keeping interest rates as high as 12%, its local citizens were getting affected, right? When interest rates increase to 12%, 15%, just because the central bank is defending the currency, the local citizens have to deal with higher interest rates, have to deal with higher inflation, and have to deal with issues like day-to-day bread prices, day-to-day milk prices, and they will get very, very angry as to why the central bank is defending its currency. So despite all the measures taken by the Bank of England of increasing interests to 15%, interest rates to 15%, and flooding the market with dollars, the Bank of England was left with no choice but to quit the decision, to reverse the decision to quit or to not join the ERM. Who won? George Soros won. And that's why that event is called as the day George Soros broke the Bank of England, because the Bank of England, the central bank of the country, had taken a decision. A fund manager didn't like the valuation and he kept taking trading positions in that currency. Seeing that trading positions being taken, others also joined in, and in this ripple effect of continued short selling, the Bank of England was left with no choice but to say that sorry, we are not entering into the exchange rate mechanism or the ERM. And they reversed their decision. It was a major embarrassment to the government at that point of time. And the man who laughed all the way to the bank, well, he's still around today and is still taking large trading positions in multiple assets and multiple currencies across the world, and has become one of the more influential community leaders, if I may say so, across the world. The man for you is George Soros.